Many traders spend months, even years, trying to decode candlestick patterns. They memorize terms like doji, engulfing, hammer, and evening star. But when it comes time to trade, they often freeze or, worse, force a setup that isn't valid. I used to struggle with this too. So in this video, I'm going to show you the only candlestick pattern guide you'll ever need. No fluff, no flashcards. Just clear, practical setups you can actually trade, step by step. Here's the truth that nobody tells you. You don't need to memorize all 30+ candlestick pattern names. What matters more is understanding what the candle is conveying. The candlestick is simply a visual representation of buyers versus sellers during a specific time period. That's it. Instead of focusing on names, start asking yourself these 3 simple questions. Who is in control, buyers or sellers? Did the candle indicate indecision or commitment? What happened after that candle closed? This mindset shift alone can save you from making dozens of poor trades. Let's simplify candlestick patterns into just 3 core types. Momentum. Candles are characterized by big bodies and small wicks, indicating strength and conviction. An example would be strong bullish or bearish candles after a period of consolidation. Rejection. Candles feature small bodies with long wicks, especially at key zones, indicating that the price was pushed back and rejected. Examples include pin bars or inverted hammers. Indecision candles have small bodies with equal upper and lower wicks and are often found in choppy markets or at transition zones. A classic example is a doji. Forget the fancy names. Focus on identifying which of the 3 types you observe and where they appear. A candle has no meaning without understanding the context in which it forms. For instance, a pin bar appearing randomly is probably just noise. On the other hand, a pin bar after a strong rally, rejecting a major resistance zone, is significant. Here's the formula I personally use. Structure plus zone plus candle equals entry. Structure, are we in a trend or consolidation? Zone, is it at a support or resistance, supply, demand, or Fibonacci level? Candle, are buyers or sellers reacting strongly? When all 3 align, you have a trade worth taking. Never rely solely on a candlestick for your trade decision. Always combine it with confirmation, which can include a break of structure, a retest of the zone, a trendline tap, a momentum shift on lower time frames. If you're using tools like Pro V3 Smart Algo, you can overlay elements such as break of structure detection or momentum filters to validate your candle setup. This helps you avoid false signals and ensures you act only when multiple factors align. Now, let me show you 3 go-to patterns I actually trade. Engulfing at reversal zones. In this setup, price forms a resistance zone, followed by a weak bullish candle, and then a strong bearish engulfing candle. Confirmation comes from a structure break on a lower time frame, making it perfect for reversals. Rejection. Wick at demand zones. Here, there's a downtrend into a strong demand zone, followed by a rejection wick and a bullish candle with follow-through. Confirmation comes from a bounce with volume or a higher low, making it great for early long entries. Momentum candle breakouts. In this setup, you have a tight consolidation or flag pattern, followed by a large-bodied candle that breaks structure. Confirmation can be a retest entry or a follow-through candle, working well on various trading instruments. Now let's talk about some common mistakes I made early on so you can avoid them. Trading patterns in random locations. Using candle setups on very short time frames creates too much noise. Entering trades before the candle closes. Forcing a pattern that isn't clear. Remember, if it's not obvious, it's not worth taking a trade. The market isn't going anywhere, just be patient. Let clean candles form. Let the context guide you, and let confirmation give you the green light. If you take away one thing from this video, let it be this. Candlestick patterns aren't magical signals. They're merely clues in the larger narrative of price action. However, when you pair them with structure, zones, and confirmation, you create a trading edge. If you want to sharpen your entries and filter out the noise, consider using tools like Pro V3 Smart Algo on TradingView. It provides clear visual cues, helps spot structure breaks, and supports everything I just taught you. The link is in the description if you're interested. Leave a comment if you'd like a part 2, breaking down advanced candle traps. And if this helped you, be sure to like and subscribe so I can continue sharing more strategy guides like this.